To keep yourself updated, subscribe to IndigoLearn and click the bell icon and download our app OneFin to start learning on the go.
Hello everyone. I hope you all are doing very well. At this point in time, I am very sure that you all must be totally engrossed in your preparation for the upcoming examination. Today in this session, we are going to take up the discussion for the RTP which has been released by the Institute for the November 2022 examination. Here, we are going to have the discussion of all the amendments which are applicable for your examination. Along with that, we will also take all the questions which have been given in the RTP for a discussion. Here, you would get two understanding. One, what are the kinds of questions we could expect in the examination. Also, through the suggested answers given here, we would be able to understand what is the kind of answers or what is the way of answering expected by the institute by us. Okay. So, what is the way of writing expected by the institute in the examination. Alright. So, these two would be understood well when we do the thorough understanding of the RTP. Before I get started with the discussion of the RTP in detail, there are few pointers which I want to highlight, which I found it to be extremely important to be shared with you. There was a webinar conducted recently for your upcoming examination, okay, that is the CA Inter and the final November 2022 attempt. Here in this webinar, there was a very clear discussion regarding some important factors which the students have to consider in their preparation strategy. So here the institute also mentioned about certain mistakes which the students are doing, both in the practical papers and the theory papers. I would give you some highlights about the theory papers that they told. Here they told that conceptual clarity has been lacking by the students, that the students are studying only summarized notes, very generalized things, because of which the in-depth preparation is not happening, and because of which the practical questions, when concepts have been tested, they are not in the position to give a proper answer. So first pointer, you have to study everything conceptually, and you are professional students, so in-depth study becomes very, very important. There is nothing going to be something summarized, nothing is to be something that is to be only studied for the sake of it. You have to study in detail, in depth, understanding the concepts very clearly. Second, students have no practice of writing which can be sensed very easily in the papers. Understand, if you do not practice in writing, in exam you will have a difficulty in actually writing it. There could be a possibility that you know the provision, you know the standard, you know the answer, but you will not be able to write it with that complete ease which you should have. Okay, and that will be a problem in your time management. Okay, so you have to ensure that you manage your time also properly, for which writing practice also becomes very important, especially to papers like audit, where practicing is very, very important. The language is heavy, the formation of the sentences becomes very crucial. So it is very important that you actually practice in writing at least few parts of it. Alright? And third important point is that when questions are being asked on a particular provision, questions are asked on standards, see that you don't overgeneralize the answers. That means, for example, students are unable to understand what the question is being asking. Like if suppose the question is based on essay 505, you are not required to write anything and everything about 505 that you know. You have to write only that which is expected from the examination. That means if the question is asking you to give examples about some external confirmation, restrict your answer only to that. Do not write anything and everything that you know about it. Alright? Overgeneralizing should not be done. And one very important point which was a key highlighter which I thought and which I also believe as a faculty, which is a problem in many students, is that there is a wrong understanding of the questions for you to write the answers. When you read a particular question, it is very important that you don't hurry up in reading the question. Do not read the question half and come to a conclusion, what is it asking you? You have to read the question patiently, understand what the question is all about, and also check what the institute is asking you, what is required to be answered. Interpretation has to happen correctly. Usually techniques are asked, you give up answer for something else. Some type is asked, you give the answer of everything connected there. So that should not be the way you give the answer. You need to read, understand, interpret, everything should be done sequentially and correctly. Comprehending is very, very important. Alright. So this you have to particularly take into account and see that you write the correct answer to the correct question. Okay. Because usually you know the concept. You know the things correctly. But the problem with the students is that in the hurry or with that anxiety, they end up giving a wrong answer to the question, and the answer to the question actually they know. But because they interpreted the question wrongly, the answer is ended up wrongly. Alright. So these points you take into account, and also the pass percentage of audit as told is only 11%, which is like really bad. Okay. So we have to come out of it and have to put an extra effort to increase this percentage and ensure that you are a part of the pass percentage which is coming up. Alright. For that, conceptual preparation very important, writing practice very important, understanding the question very important, interpreting and writing it correctly is also very, very important. So with this, now we'll get started with the RTP and get an insight of what are the latest amendments which are applicable for you. Along with that, we will also take into account all the questions. So let us first begin with the academic updates, that is the amendments relevant for the November 2022 examinations. So let us check all the relevant amendments which are there for your coming examination. So the academic update that we are going to go through first. The entire amendments are focused on the chapter 7, that is Audit Committee and the Corporate Governance with the SEBI LODR regulations. Alright, they are very few in number, not very complicated, simple. So let us go through all of them for your understanding. So first one is with respect to the Regulation 18. The first is with respect to Regulation 18, which is talking about the composition, that is the Qualified and Independent Audit Committee's composition, where you talk about the Audit Committee shall have minimum of 3 directors as members, which remains as it is. But we earlier had it as 2/3 of the members of the Audit Committee shall be independent directors. Here they have inserted the word at least. That is the only change which has come. So now you are reading this particular regulation as at least 2/3 of the members of the Audit Committee shall be independent directors. Alright. The remaining part of the regulation is going to be the same. No change absolutely. So here there is insertion of the word 2/3. Alright. Then moving on to the next one, that is with respect to statement of significant related party transactions. Here we talk about the review of some of the matters which have to be compulsorily done by the Audit Committee. Alright. So this we study as a review of information by the Audit Committee, which is mandatory review. We have 6 items there. If you can recollect, like management discussions and the analysis of the financial conditions, correct? Then we have management letters or the letters of weaknesses in the internal control issued by the statutory auditors. Then you have the appointment, removal, okay, and all the terms of the chief internal auditor, okay, all the terms of his appointment. So all of these have to be reviewed mandatorily by the Audit Committee, which is given in the regulation. So like that we have 6 pointers. One of the point is that they also have to review the statement of significant related party transactions, correct? But now that has been eliminated. So out of all the 6, now this part is not to be included as a part of mandatory review by the Audit Committee. Alright. So that is the second one. Third, there has been a deletion of point number 4, from where verification regarding composition of Board of Directors. So when you talk about verification regarding composition, that is rules, regulation 17 and 17A, there are multiple points which are to be taken into account when you do the verification of the Board of Directors composition. That means how many should be the minimum numbers, etc. So there we have one of the points which talks about auditor shall ensure that the chairperson of the board of top 500 listed entities is non-executive directors and such terms and all these things. Correct? Now this total point has been eliminated. So when things are eliminated, we will not go into detailing of it. You simply have to understand out of all the points that we were discussing in the regulation 17 and 17A are to be eliminated. Alright? That is, out of that, this one point completely gets knocked off. So now you will read the regulation without this particular point. Alright? Then, next one, when they actually deleted regulation 17 and 17A, we are with ICAI. So they come up with the new insertions, correct? So they removed one, but they have added 3 extra pointers. Okay? So which are the three things that they have added with respect to regulation 17, that is verification or regarding the composition of board of directors. Okay, so let us see what they have written. First, the listed entity shall ensure that the approval of the shareholder for appointment of a person on the board of directors or as a manager is taken at the next general meeting or within a time period of 3 months from the date of appointment, whichever is earlier. So now they are telling any person whom you are putting onto the record, that means whom you are appointing on the board as a director or as a manager. Why precisely manager is mentioned? Because the powers will be similar to that of the director. So any person you are appointing on the board or as the or as a manager, then that appointment has to be compulsorily approved by the shareholders in the next general meeting or within the time period of 3 months, whichever is earlier. So compulsory, it has to be approved by the shareholders in the general meeting or within a period of 3 months, whichever is earlier. Okay, then provided that appointment or a reappointment of a person, including as a managing director or a whole-time director or a manager, who was earlier rejected by the shareholder at a general meeting, shall be done only with the prior approval of the shareholders. Very logical and very interesting. What they are telling is, there is this person A, who in the previous annual general meeting was nominated for the purpose of appointment as a director. But the shareholders did not pass the required resolution and he was not appointed for the position of the director. It could be managing director, it could be whole-time manager, anything, but he was not elected. This same person A, now we are appointing him as a part of the board. Alright, that means we are reconsidering and he has been appointed or reappointed into the board again. Now tell me, when he was not appointed earlier in the previous AGM, if you are reappointing that person during the year, okay, as a part of the board, then don't you think for this you require to have a prior consent of the shareholders? Very much yes. So here they are saying, it's quite logical also, provided that the appointment or the reappointment of a person. So in my example A, including if he is a managing director or whole-time director or manager, who was earlier rejected by the shareholder at the general meeting, shall be done only with the prior approval of the shareholders. So you obtain a prior approval of the shareholders and only then you can appoint A on the board. Correct? Then, further, that the statement referred to under subsection 1 of section 102 of the Companies Act 2013, annexed to the notice of the shareholders for considering the appointment or reappointment of such person earlier rejected by the shareholders, shall contain a detailed explanation and justification by the NRC and the board of directors for recommending such person for the appointment or reappointment. So what they are saying, as per section 102 subsection 1, that is nothing but you need to annex an explanatory statement. Okay, explanatory statement to the notice. Correct? In this explanatory statement, they are telling you, give the detailed explanation and the justification of appointing Mr. A on the board. Got it? So here they are saying the NRC, that is Nomination and Remuneration Committee, and the board of directors, those are recommending this person for appointment. Okay, they have to give detailed explanation and justification for such appointment. Where in the explanatory statement, which you are going to annex to the notice of the general meeting as per section 102 subsection 1. Got it? So what they have done is, first, when you talk about the third amendment, here they are talking about regulation 17 and 17A, where they have deleted a point. So in the verification of the composition of the board, the point getting eliminated is about this ensuring of the chairman of the board. Correct? And if they have deleted that, they have added 3 more pointers. So 3 points are, first one is that the appointment has to be accepted, that is approved by the members in the next general meeting or within a time period of 3 months, whichever is earlier. Suppose if that person was earlier rejected and that same person you are considering now for appointment in the board, see that you do it only with the prior approval of the shareholders. So when you take the prior approval of shareholders and you send the notice of the general meeting to them, you have to annex an explanatory statement along with it, and in the explanatory statement you have to give detailed explanation and justification of why are you appointing or or why are you recommending the appointment of that person again on the board. Got it? So all of this has to be given, and obviously it is coming from NRC and the board of directors. So these three are the additional points that you have to understand which they have been added in regulation 17 and 17A, which is verification of the composition of the BOD. Alright, then moving to the next one, that is meaning of independent director, very important point. Okay. So when you talk about understanding the meaning of the word independent director, then we tell that independent director is a non-executive director other than a nominee director of a listed entity. Correct? All the points remain the same which are given as earlier, except for one very important point. That means there are certain attributes that we are going to consider when you look into the qualification of a person who can be appointed as the independent director. One of those is what? Who, apart from receiving director's remuneration, has or had no material pecuniary relationship with the listed entity, its holding, subsidiary or associate company, or their promoter or directors during the 3 immediately preceding financial year or during the current financial year. So when you look into this qualification or disqualification, as you may consider, earlier the timeline was 2 plus current year. Now it has been amended and made as 3 plus the current year. Alright. So very importantly, when you look at section 149 subsection 6, okay, of the Companies Act 2013, which talks about the independent directors, okay. So there we understand that you have to look into the criteria for the last 2 years along with the current year. But when you look into the SEBI LODR regulations, there has now been a change and the regulation has been amended, and now the 2 years have been replaced to 3 years. They have changed it to 3 years. But one very important thing to understand, the change is only in the regulation. It is not in the section 149 subsection 6. So there it continues to be 2 years, whereas in the regulations, that is when you talk about the regulation year, there has been a change of 2 turning into 3 years. Clear? So now when you look into the regulations and that criteria which when you satisfy, you will then fulfill the criteria of the last 3 years plus the current year. For which one? Fourth one. Clear? So this is one very important thing that you have to understand. Also remember, the section has not got under change. So there it continues to remain 2 years only. Alright? Then, moving to the next one, the remaining part here is the same. Then, yes, the fifth one, the deletion of the word, okay, before that it is with respect to employees including senior management, KMP, directors and promoters, obligations. Alright? Now, here we talk about the obligations of the senior management, correct? Or the key managerial personnel, directors, etc., where they have a responsibility that whenever there is a resignation by the independent director or removal of the independent director, this position has to be filled up, correct? By whom? The board of directors. So earlier, if you understand, the timeline was in the next board meeting, that is immediate next board meeting, or within the period of 3 months, whichever is later. That was given. So now what they are telling is, they have deleted the words, the immediate next board meeting, or the comparison was done whichever is later. So whichever later is also eliminated. That means now how will you read is, an independent director who resigns or is removed from the board of directors of the listed entity shall be replaced by a new independent director at the earliest, but not later than 3 months from the date of such vacancy. So now they don't have the comparison that 3 months or next board meeting, whichever is later. This comparison is not there. Now they simply say earliest, but it should not be more than 3 months. Got it? So this comparison has now been eliminated. So very important point of discussion. So here you have to understand there has been a replacement, and a proper understanding here is that by a new independent director at the earliest, that means as soon as possible, but the maximum timeline given is what? 3 months from the date of such vacancy. So the maximum timeline that you have now is 3 months. Got it? Then, sixth, they talk about the NRC. Okay. Here the word in NRC also they talk about the composition only, that is regulation 19. The board of directors of every listed public company shall constitute NRC, which shall comprise of at least 3 directors, that remains the same, all of whom shall be non-executive directors, and at least 2/3 shall be independent directors. Earlier it was 50% shall be whom? Independent directors. This 50% now they have aligned it with audit committee and they make it what? 2/3. Okay. So instead of half, it is now becoming at least 2/3 shall be independent directors. A major change here. Okay. So as per the regulation 19, this 50% is now turned to 2/3. So remember very carefully, NRC, that is Nomination Remuneration Committee, is coming in line with that of the audit committee. So in audit committee, where you are giving 2/3 of them to be independent directors, that is at least 2/3 of the members. Similarly, here also 2/3 of the members are considered are required to be what? Independent directors. Alright, then there has been an insertion in the role of Nomination and Remuneration Committee. So here they have just extended, okay, the role of the Nomination and Remuneration Committee. So where you talk about the earlier 6 things that we included as a part of role of this committee, they have simply added one more, or maybe they have extended one more, where they have to consider the criteria, the qualification, positive attributes for the appointment. All right. So there they put in further things, that is 1A has been added. For every appointment of an independent director, the NRC shall evaluate the balance of skill, knowledge, experience on the board, and on the basis of such evaluation, prepare a description of the role and the capabilities required of an independent director. Alright. The person recommended to the board for appointment as an independent director shall have the capabilities identified by such a description. For the purpose of identifying suitable candidates, the committee may use the service of an external agency. If required, consider candidates from wide range of backgrounds, having due regard to the diversity. Consider the time commitment of the candidates, how much time they can actually give to the commitments that they are taking over, okay, how long they can serve as the independent directors basically. Alright, so all of this is what they are going to take into account along with all the other things earlier, like evaluating the qualification, their positive attributes, their extra qualification, whatever was required. Earlier evaluation what NRC did, that was required as it is. Additionally, they also want you to now give this kind of extra evaluation also. That means you give focus on skill, knowledge, experience on the board. You evaluate all of this and then make a description of exactly clearly what kind of role and the capabilities you are looking in for. And based on the description, then you are going to look into the suitable independent directors. Alright. So that is what is given as a part of extension in their role. Okay. Then comes to the risk management policy, that is regulation 21. So regulation 21 talks about the risk management policies. So we believe risk is like very normal for every organization, and every every company's board of directors should take into consideration the risk management as one of the very important areas. Okay, risk could be every kind. Internal risk are there. You have external factors. Okay, multiple risk the organization is going to be exposed to. So these risks have to be properly managed. For this purpose, the board of directors will be having the policies made up. All right. So here, what they talk about in the regulation 21 is about the risk management policy. There is also to be a committee called as the risk management committee. So this committee is going to take into account all of these policies and all the procedures. So here there has been an insertion, or they are explaining what is the role of this risk management committee which has been formed out of the board of directors. All right. So here first of all they are telling regulation 21 shall be applicable to top 1000 listed entities determined on the basis of market capitalization at the end of the immediately preceding financial year, and high value debt listed entities. So high value debt listed entities, the meaning is quite simple. Okay, and this 1000 listed entities which are the topmost, okay, that we are going to consider taking the market capitalization. Okay, then here they have given you the role of a risk management committee. Okay, inter alia shall include the following. So very simple, what will they do? They will formulate detailed risk management policy. That is the main criteria for which they have formed. Okay, that means they will take into account all kinds of risk. What all risk could be there? You could have, in case of listed entities, you could have financial, operational, sectorial, sustainability, cyber security risk could be there. Okay, multiple risks are there. Then measures for risk mitigation. Okay, then business continuity plan, that is BCP. All of this should be taken into account. Then to ensure appropriate methodology, Okay, that means the method for implementing it. Implementation alone will not be enough. You have to monitor and oversee the implementation as well. Periodical review of the risk management, very, very important. And please remember the timeline, at least once in 2 years, compulsorily. So the board should compulsorily review the policies made within at least once in 2 years, including by considering the changing industry dynamics and evolving complexity. So every 2 years there has to be a proper re-evaluation of what the risk management policy. Then to keep the board of directors informed about the nature and content of its discussion, recommendation and the action to be taken. Obviously they are accountable to the board. So whatever changes are required, they will be telling it to the board. The appointment, removal and the terms of remuneration of Chief Risk Officer, if any, shall be subject to the review by the Risk Management Committee. The Risk Management Committee shall coordinate its activities with other committees. In instance there will be any overlap with activities of such committee as per the framework laid down by the board of directors. So this is nothing but they have simply included the role of the Risk Management Committee. Alright, that's what is told here. So this is like, understand it's a Risk Management Committee. So basically they are going to look into the risk. So first they'll formulate. Formulation will include all the possibility. That means you will take into account all possible risk. Internal, external, depending upon the environment you are working in. You are exposed to n number of risk. Okay, then when risk is encountered, there has to be measures for mitigation. You should also have a backup plan, which is the business continuity plan. Okay, that. Then once the formulation is done, you should also ensure there is appropriate methodology, process, everything designed properly. Then very important is monitor, because without overseeing, things are not going to work. So monitoring is also important. Then periodically review the risk management policy. Review will basically be done by BOD. So that is going to happen once in 2 years compulsorily. Then you have to keep on informing the board of directors regarding any changes that have happened, discussions and all that take place. Then the appointment and the removal and the terms of remuneration of the Chief Risk Officer, if you have any, that also will come under the review of the Risk Management Committee. Alright. So all of this is going to be included as a part of the Risk Management Committee. Alright. So this is quite important. Then moving to the next one, we have the Regulation 36, which talks about information to the shareholders. Okay. Now this information to the shareholders, there are minor changes. So I would recommend that you actually study this entire regulation from the amendment itself. Alright. So they say the listed entity shall send annual report in the following manner to the shareholders. First is soft copy of full annual report to all the shareholders who have registered their email addresses either with the listed entity or with the depository. Okay, so either you have given it to the company directly or it is with the depository. You will get soft copy. That means soft copy will be given to every registered shareholder, registered either with the company or with the depository. I mean email registered, okay. Email addresses should be registered. Then hard copy of the statement containing the salient features of all the documents as prescribed in section 136 of the Companies Act 2013 or the rules made thereunder to those shareholders who have not registered. Correct? So for them all copy will not be given. So hard copy of the statement containing salient features. So those who have not given their email registered with the company or the depository, they will get what? Hard copy, but only the salient features. Then hard copies of full annual reports to those shareholders who request for the same. So 3 categorization they have done. First is soft copy to all. Understand, soft copy you will give only if you have the email IDs, right? So the email has to be registered either with the company or depository. Correct? If not, you will get hard copy, but only the salient, that is the important features only will be covered. You could get full hard copy if you are requested. So this is entirely regulation 136, quite simple. I would recommend you learn from here only. Alright then. Then apart from that, you also have the listed entity. This is all correct, the same. In the third point, when you look at the point F has been extra now. So where in case of independent directors, the skills and capabilities required for the role and the manner in which the proposed person meets the such requirement, that also should be added. Okay. So up to E, it's all the same. One addition is for the F1. Okay. Yes. So that is the only thing that we have to understand when it comes to regulation 36. Alright. Okay. Then comes to the 9th one, that is regulation 23. So here first, it's about related party disclosures. Okay. So here, The listed entity shall submit a quarterly compliance report on corporate governance in the format as specified by the board from time to time to the recognized stock exchanges within 21 days from the end of each quarter. Okay, so 15 becomes 21. Okay, so it's now 21 days from the end of each quarter. Then further, the listed entity is also required to formulate a policy on the materiality of the related party transaction and on dealing with the RP transactions. This policy should also include clear threshold limits duly approved by the board of directors. That means materiality level you have to fill in, okay, which we are going to consider to be material related party transactions. Further, such policy shall be reviewed by the board of directors at least once in every 3 years, very, very important, and updated accordingly. A related party transaction shall be considered material if the transaction or the transactions to be entered into individually or taken together with the previous transactions during a financial year exceed rupees 1000 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statement of the listed entity, whichever is lower. Please remember this for the coming examination. Very, very important. Here what they are telling is, it is required for the board of directors now to formulate a policy regarding the materiality of a related party transaction. So you have to fix a threshold limit which has to be duly approved by the board of directors, okay, to decide the materiality here. Such a policy shall be reviewed by the board of directors at least once in every 3 years. Very, very important point. So you have to review once in every 3 years, one very important thing, and update it accordingly. Alright, then. A related party transaction shall be considered material, okay, if individually or all the transactions taken together during a financial year exceed rupees 1000 crore or 10% of the annual consolidated turnover of the listed entity, whichever is lower. So you have to compare these two. Whichever is lower, that will be considered to the threshold as materiality. Okay, very, very important. So this part you have to take into account properly. All related party transactions and subsequent material modification shall require prior approval of the independent directors in the audit committee of the listed entities. So all of this will require a prior approval of the independent directors. Audit committee may grant omnibus approval for the related party transactions proposed to be entered by the listed entity subject to certain conditions. The listed entity shall submit to the stock exchange disclosure of the RP transactions in the format as specified by the board from time to time and publish the same on the website. This remains the same. Provided that a high value debt listed entity shall submit such disclosures along with the standalone financial statement for the half year. Then, provided further that the listed entity shall make such disclosures every 6 months from 15 days from the date of publication of standalone and consolidated financial statements. Alright, so this is very, very important. So here understand, first thing, the key takeaways are 21 days, then the material threshold, that is, first of all, the policy has to be reviewed by the board every 3 years and updated accordingly. Along with that, what is considered to be material here, if you consider it individually or taken together, the amount is considered to be 1000 crore or 10% of the annual consolidated turnover. Okay, whichever is lower. Then all of these will require an approval coming from the independent directors from the audit committee. Okay, then comes to regarding is this submission to the stock exchange, all the disclosures. Okay, alright. Then moving on to the last part, that is as per the schedule 5 annual report. The annual report shall contain the following additional disclosure relating to related party. So already few of the disclosures we have understood as per the accounting standard and all of that. But there are some more things that we have to understand here. They have added 3 more. So first one, in the accounts of holding company, this is the disclosure that you have to give. In the account of subsidiary, this would be the disclosure. And in the accounts of holding company, further. Alright, so listen to this carefully. The listed entity which has listed its non-convertible securities shall make disclosures in compliance with the accounting standard on the related party disclosures. So that is not new. Okay, then. The disclosure requirement shall be as follows. In the accounts of holding company, loans and advances in the nature of loans to the subsidiary by name and account. Correct? So, name as well as the amount both has to be given. Loans and advances in the nature of loan to the associates, again by name and amount. Loans and advances in the nature of loans to the firms, companies in which directors are interested by name and amount. So, what are directors are interested, we will see that later, but these are the three things that you have to give a disclosure along with the name and the amount which has been given. In the books of subsidiary, same disclosures are applicable to the parent in the accounts of subsidiary company. Correct? Then, holding company, investments by a loanee in the shares of a parent company and subsidiary when the company has made a loan or advance in the nature of a loan. Okay, so these are the three additional disclosure requirements that are there. Then when it comes to interested, okay, interest shall have the same meaning as given in section 184 of the Companies Act 2013. Disclosure of the transactions of the listed entities with any person or the entities belonging to the promoter group which holds 10% or more shareholding in the listed entity in the format prescribed, this is the same, there is no change here. So, this will remain the same. So, here this part becomes very, very important. Alright, so that is the change that they have brought over. So, these are all the amendments, as I told you, there are not very heavy ones, they are quite understandable, they are simple also. And they are basically focused on audit committee and the corporate governance, that is the SEBI LODR regulations. Okay, so these are the only academic updates that you have. So, with this, we are done with the discussion of the amendments.